Hello everyone, welcome to a new video. It has been already a while since I last did an update on my stock market portfolio. More concretely, I last did this update on April 11th, 2020, which is already more than 6 months ago. And since then, the stock market has seen an increase of around 25%, which has got many investors who were expecting a double-dip recession, but certainly we are in a V recovery, at least for now, and we are at even higher levels than we were in January this past year, right before the crash. With all of this in mind, and considering that I have been consistently investing after I made that previous video, let's go and check my current stock market portfolio, which is worth 11,174 euros and 36 cents, and go over all the positions I have. Firstly, I want to mention that this video is done for entertainment purposes and mostly as well for myself, in order to be able to look back in the future and see how my progression has been over time. So please always do your due diligence before investing in the stock market or any of the stocks that I will be mentioning in this video. But with this out of the way, let's go into my brokerage account, The Hero. Currently, I'm holding 33 companies, most of which are US companies trading in the New York Stock Exchange, mostly. And the worst performing stock I own is the only one that is not trading in the US, which is the same that I already did the video before, and that is Banc Sabadell. From this, I have learned some crucial things, the first one of which is to only invest in markets, in winning markets. And this is certainly not the IBEX 35 where Banc Sabadell, this company, is trading at. And for those of you who do not know, the IBEX 35 collects the 35 most or largest companies in Spain, and is the worst place you could put your money into. I have already mentioned it in other videos, but if we check its graph, we can see that it is trending sideways, and currently we are at similar levels to 2002. And instead, indexes such as the S&P 500 have had a clear uptrend throughout history, and we can also see that it is at even higher levels than before the crash, something that it is clearly not the case with the IBEX 35, which went down and just stayed there. And what is crucial to understand is that it is investors like you and me, okay, maybe probably not us unless you are a millionaire, but essentially that make markets go up and down. Companies from Spain, just to mention one country, can do very well, but if there is no interest from investors in investing in that particular market, it doesn't matter. And this is the most essential conclusion, which is that you should invest in winning markets. And at the moment, the winning markets and where people are putting their money into are all basically in the US, whether it's the S&P 500, the Nasdaq, you name it. Now, just before we go into all the stocks of my portfolio, I just want to mention how I will be structuring the video, which will be that I will be mentioning the 33 companies that I own and giving a small comment on them. I will not be fully analyzing each and every single one of them, because ideally, I would like this video to be between 15 and 20 minutes maximum. Let's see about that, but otherwise it would be super long. Nevertheless, I must say that I have done in-depth analysis on many of the companies that I will be mentioning, and they will all the videos linked down below in the description in case you're interested. You see one company that you like, and then maybe you want to go and dig deeper into it. And if I have not done any video on it, please let me know in the comments below, and I will try to make one. That said, the first stock in my portfolio is AT&T, which is a huge telecommunications company. I currently own 14 shares of it at an average price of $29.05 per share, and as you can see, I am down 7.65%. This one is currently yielding a 7.57% at its current price, which is incredibly high, and its price is this low because the management of the company has done some very poor decisions in terms of acquisition of other companies that have gone wrong, and the company also has a lot of debt. Next one is Alibaba, that you probably know about, and which is kind of like an Amazon in China, with not only e-commerce, but they also have Alipay, which provides payment services, and they are also into cloud computing. Great company with a lot of potential growth. I have one stock of it, I bought at $268 each, and I'm currently 13.65% up. This one in particular does not pay dividends, but you will see that I have transitioned a bit from owning only dividend stocks to also including some growth stocks. The reason for it is that I'm not planning on selling any of these stocks in the next at least 10 years, and since I'm not in my retirement, I don't need that cash flow from the dividends, and also hopefully I can get one company at a relatively early stage that can grow a lot, and then at a later stage in the company life start paying dividends, and then I can get some very nice yields from that. And finally, and very importantly, is that if I invest in these stocks, it's because I think that they are great companies that still have a lot of room for growth and that will do great in the future. Let's see how it goes, but I really believe, for instance, in Alibaba. Now comes Banc de Sabadell. Not much to say on this. I own 3,000 shares of it at an average buying price of 63 cents per share, currently down 55%, or the same as losing 1,042 euros. Clearly a mistake from the past, first because of putting too much weight in this stock, and secondly, as I mentioned, for investing in the IBEX 35, the SPANX index. For now, I'm not selling anything, as I am waiting to see whether they end up merging with another bank or what do they do exactly, because the situation is not very clear. Bank of America Corporation, one of the largest banks in America. I own 7 stocks of it at an average buying price of $23 per share, and it is just up over 1%. I see a lot of fear around financials, but I do still believe that they will come out of this and stay profitable, and they are especially very attractive at the current prices. Next is Boeing, the famous aerospace company that sells planes as well as helicopters and satellites, among other things. It has been beaten down a lot because of the plane crashes of the 737 MAX planes as well as the pandemic, but I certainly see a lot of potential for it in the long term. It only has one main competitor, which is Airbus, and I think that there is room for both companies to be successful and make a lot of money. Currently, I have 4 shares of it at an average buying price of $170 per share, and I am down 2%. I certainly want to add more shares of it, especially if the price of the stock falls below $140 per share. Brookfield Renewable Corporation is a renewable energy company that operates power plants all over the world. Currently, I own 5 shares of it at an average price of $51.50 per share, and I am up 31%. I like a lot the company, but I think that at the moment it is overvalued, so for now I'm not planning on buying more shares of it. Carnival Corporation is the largest cruise line company in the world. It was very profitable before the pandemic, but took a huge hit because of it. I still think though that they will make it through. Nevertheless, this is a high risk, high reward stock, so currently I have only 26 shares of it at an average buying price of $15.54 per share. I am currently down 9.85%, but it does not worry me at all, as I am looking at the very long term. The next one is Coca-Cola, which I think it needs some presentation, but just so you know, it owns more brands than not just famous Coca-Cola. It has been a great company, and it still is, but the future growth perspectives of it are limited, as it is already expanded pretty much all over the world. Clearly a conservative play with a 3.27% dividend yield. I currently own 3 shares of it at an average buying price of $45 per share, and I'm almost 3% up. Next comes Delta Airlines. I own 14 shares of it at an average price of $29 per share. Currently I am 6.63% up. A bit of a risky stock, but I think that they will make it, as they have also a very good balance sheet. ExxonMobil Corporation. I bought this one right on the crash of March, and it has performed so bad that I'm only 1% up. I own 10 shares of it at an average price of $31 per share. The oil sector has been hit pretty hard, and Exxon is really struggling a lot. Probably one of the ones that is doing worst among its competitors. Nevertheless, I will still hold on to it, as I think that oil will still last for some more years, and the dividend yield is on 10%, which is of course not sustainable, but let's see how it goes. Facebook is another growth stock that does not pay dividends. I bought it at $264 per share, and I'm currently up 1%. This is one that might be overvalued at the moment, but I think that it has a great business and will do great in the long term. Hannon Armstrong Sustainable Infrastructure Capital is a company that invests in renewable energy projects. I bought in at $16.8 per share right during the crash. I own 15 shares of it, and I'm currently up a whopping 150%. Really happy with this, no plans to sell it, and at my initial buy in price, I'm getting an 8.1% dividend yield, which is great. And just a clear regret that I of course did not invest more money in it. Afterwards, we have Intel Corporation, which is a company that makes processors as well as chips for computers, among others. I bought it exactly when it dropped because of the news that they were delaying more their 7nm chips. They are still very strong and doing great, and with the amount of money they invest in research and development, I think that they should be able to stay ahead of the competition. I bought in at $48.23 per share, and I'm currently up almost 14%. Next one is IBM, also known as International Business Machines, which sells computer hardware and software, as well as providing consulting services. I own 2 shares of it at an average buying price of $122 per share, and I'm up almost 5%. Recently, it announced a spin-off, which means that it will separate the company in two, and all investors holding shares of IBM will also be given another share of the new company. JP Morgan is also one of the biggest US banks and one of the best managed ones, if not the best. I own 2 shares of it at an average buying price of $92 per share. I'm currently up 6%, but if they go down under $94 per share, I might add more to my portfolio. Johnson & Johnson is a pharmaceutical company that has had a great performance since it was founded in 1886. Very diversified range of products and a solid dividend of 2.73% at its current price. I bought 2 shares of it at $145 per share, and I am up a 1%. Kinder Morgan is a company that mostly transports natural gas across North America, amongst other goods, through their pipelines. I think that natural gas will be used more and more in the next 10 years, and Kinder Morgan should benefit from it. Also, it offers a dividend yield of 8.1% at the current price, which is very nice. I own 16 shares, which I bought at the price of $14.82 per share, and I'm currently down almost 15%, but again, I'm not worried as I'm expecting it to do well in the next 10 years to come. Kraft Heinz is a food company that owns many brands, amongst which we find the classic ketchup or Master Heinz, among others. Its stock price was hit hard due to bad accounting practices in 2019, but I like it that it is a conservative company that sells products that are used on a daily basis. Moreover, its current dividend yield is of 5%, which is also interesting. I own 23 shares of it at an average buying price of $24.60 per share, and I'm currently up 24% as I added more shares of it during the crash and lowered my cost basis. Next comes Leggett & Platt, which is a company that designs and produces a wide range of products that can be found in homes as well as in cars. I own 4 shares of it that I bought at an average buying price of $27 per share, and I'm currently up 55%. Microsoft, I think that does not need much introduction, but something relevant is that it recently announced that they would acquire ZeniMax, which is one of the world's largest game developing companies in the world. I bought in at $208 per share, and I'm currently up almost 7%. Nvidia Corporation is another growth company that creates processors and chips for computers, as well as diverse hardware and software. They work, for instance, on having automated cars and self-driving features, among others. Very importantly, they recently announced that they wanted to acquire ARM for $40 billion and create the world's largest computing company for the age of artificial intelligence, which is something super crucial, and we have to monitor how it goes as the UK government wants to block the operation. I bought in at $512 per share, and I'm currently 9% up. NextEra Energy is a clean energy producing company. It has a renewables division that I really like and has announced plans to acquire Duke Energy. I bought in at $226 per share, and I am up 24%. Nordic American Tanker has ships that transport oil through the sea. I honestly bought it just to do a swing trade, as I thought that it would benefit more than it did when the crash happened, as oil companies had to store oil somewhere and their ships were a good alternative. It of course went horribly bad, as they could not maintain the numbers that they were reporting, and I'm currently 30% down. Since I have only invested $100, I might not sell it in case there is a second lockdown, but it is a company that I certainly do not like at all. And this is another important thing, which is that you should only own companies that you would be comfortable holding for a very long time and that you believe in. Omega Healthcare Investors is a REIT that owns nursing homes and senior housing in the US and UK and rents them to qualified operators. I like their focus because whether we like it more or not, there is more and more need for this type of facilities with the general aging of the global population and the extended lifespan. I also like a lot their financials, and I currently have 13 shares of it at an average buying price of $29.55 per share, and I'm up a 4%. Next one is Raytheon Technologies, which is an aerospace and defense company that makes products such as aircraft engines, aerostructures, missiles, air defense, and drones. Again, an industry with a lot of potential in my opinion, but that has currently been hit hard. I own 4 shares of it at an average buying price of $60.90, and I'm currently up just over 2%. Realty Income Corporation, also known as the monthly dividend company, since it pays dividends on a monthly basis, its annual yield is not extremely high, but it is of 4.6% at its current price, which is okay. In case you do not know, it is a REIT focused on renting mostly commercial properties under long-term net lease agreements. I currently own 6 shares of it at an average buying price of $45.20 per share, and I'm up 23%. Also, I think it's important to highlight that it is a company that is very well run in my opinion. Simon Property Group is another REIT, but this one is focused on shopping malls, and these have not been doing very well. The stock has fallen considerably because of the pandemic, but I think that it should be able to survive until a vaccine is found and people go back to shopping malls. The dividend yield of this stock is also very high with an 8% at its current price, although they had to cut it. Personally, I own 8 shares of it at an average buying price of $45 per share, which means that I'm getting a dividend yield of 11.46%, plus it is up 32%. Southwest Airlines is the following in the list, and it is probably the US airline that is better positioned to survive this pandemic. It has a great balance sheet and is very well run. I own 7 shares of it at an average price of $38 per share, and I'm currently up almost 5%. This is a stock that if it goes under $35 per share, I will certainly add more. Okay, so now we're ending the 5 last companies in my portfolio, and I know that this video is turning out to be quite long, but if you're still watching, then I guess that you are finding some value in the video, and then I would very much appreciate if you could give it a like, as it helps me out tremendously. That said, the next stock on the list is TransAlta Corporation, which is a power producing company in Canada. It is important to highlight that they are transitioning to renewable energies and currently are one of the largest producers of wind energy in Canada. I own 70 shares of it at an average buying price of $3.85 per share, and I'm up on this a 56%. Ventas is a REIT specialized in healthcare facilities in the US, with senior housing facilities being the top of their investments, followed by medical offices, research and innovation facilities, and health systems, among others. Same as Omega Healthcare we saw before, an industry with potential that there is always need for. I bought some shares of it at $21.70 per share, and I'm up 81% on this. WP Carey is also a REIT, and this is one of my favorite ones of all since it is very well diversified geographically, with 63% of the properties in the US, followed by 34% of the properties in Europe, as well as with property types, that we see that they have 24% of industrial, followed by warehouse, offices, retail, and self-storage. Of it, I own 9 shares at an average cost basis of $67.67 per share, and I'm down around 2%. This is one that if it goes down below $62 per share, I will add more of it for sure. Next is Walgreens Boots Alliance, which is a company that is also trading under discount in my opinion. They have a great business, which is in pharmacies in the US, as well as owning other companies even in China. Of Walgreens, I own 34 shares at an average cost basis of $38.73 per share, and I'm down a 6%. Finally, we have Waste Management, which is an American company that manages the collection of waste, distribution, and storage. Also a sector with potential and that will gain more and more importance as the human population increases and there is a bigger need for recycling and taking proper care of the waste generated. I own unfortunately only 1 share of it at $101 cost basis, and I'm up almost 6%. So with this last company, we have already covered my whole entire portfolio, and just historically, so since I started investing almost 2 years ago, it is up 1,794 euros and 15 cents. Considering that I initially invested 9,380 euros and 21 cents, it represents a 19.13% increase since I started investing in this platform almost 2 years ago. Of course, if I was not down in Banc de Sabadell so much, I would be up much more, but nevertheless I'm very happy with how it's going, as you cannot expect your whole portfolio to look red, but it's very important to diversify it, and in the case of Banc de Sabadell, I clearly didn't diversify enough and I put too much money just on one stock. But anyways, we always learn from the mistakes, and I'm very happy, as I said, with the progress overall. In any case, I will leave it for today, as I think that the video has been already pretty long. Remember that if you have any other companies that I mentioned you want me to analyze deeper and I have not done already an analysis on them, you can let me know in the comments below. If you enjoyed the video, then please make sure to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.